Hello everyone. Good morning, good morning. Welcome to this Monday live trading webinar here at MarketMinds Mastery. I hope you guys have a nice weekend. You got some rest and you are ready to start with the trading activity this week. So let's get started. Now, first one, Australian dollar, US dollar. Ladies and gentlemen, the price created these lower highs and lower lows. Now, there is a battle between the buyers and sellers. You see one bearish candle, one bullish candle, one bearish candle, one bullish candle. So there is no significant move after the break occurred. So the market is still indecisive. We definitely want to see where it's gonna hit it first, and then we're gonna look to initiate more trades. Last week I took a trade with this up. Looks like a bit messy here. A good trade last week. We said it was this one here. Entry, exit here, and that was it. It lasted for 1 day only. Now, if you are new to trading, guys, I encourage you to use some kind of indicators to understand how to map the market better, to understand how to find maybe some trends. So if you use on forex markets the 20, 50, and 200, they work pretty well because the market most of the times respect the indicators. By the word respect, we mean it bounced off the indicators. So this area of resistance among with these two indicators here, it consists with a good maybe selling opportunity if the price arrives here and reject it. And you can use the same indicators in all time frames. These are the moving averages. In technical analysis, we have something that we call the golden cross, and it's when the 50 period moving average that it shows with red color crosses from above under the 200 period moving average, shows with the the death cross, not the golden cross, and that shows that the market is now in favor of sellers. So based on the indicators, the market is bearish. The RSI is under 50, and that's also bearish. We just need to find some ways to get involved. Euro US dollar. Last week the price was traded within this high and low of that bearish candle, and we do expect to see continuation to the downside. The 200 period moving average, guys, it's the one shown with the green color here, and recently you see starting from there all the time price comes and reject the moving average, or if it penetrates it with this one here, penetrates it with a significant volume. So it's a moving average that many traders around the world, especially professional traders, they are looking into this stuff, and they are trading they are taking trading decisions as well based on this indicator. So it's worth just having them on your chart if you want that. If we go down to the lower time frame, for example, on the hourly chart, we see that the euro US dollar, it makes higher highs and higher lows. But let's see what's going to happen. Now it's a London Open. The market digests the information from the last week as well. Next one, Great British Pound and the US dollar. The price in this one here, it was better to capture this market with the Bollinger Band, as you can see on the screen now. Bollinger Band, they are useful pretty well, not only in trending market but also in ranging markets, because the price fluctuates perfectly most of the times within the upper and the lower band. Price broke to the downside, but we are around the 1.25 level, and that's a very, very, very significant and a vital level for traders. Guys, they are looking to get involved with that many professional traders, so the market also bounced upwards. It reacted. Now, we don't know if that level will create a new uptrend. The only thing we know is that the price at that level stopped moving lower. So it's packed within the Bollinger Band boundaries. That's the 20-period moving average of the Bollinger Band. That's the middle of the band. If the price is going to stop here and reverse, we're going to look for short opportunities. Now, there are different ways to look for short opportunities here. We can wait, let's say, and we go to the 4-hour time frame and see what's going to happen and trade, let's say, some kind of double top. Or we can look at the hourly chart and find again some kind of rejection, double top. Maybe the trend will turn and the market from an uptrend will turn to a downtrend. So there are multiple ways to get involved. But because here on this webinar we have only 30 minutes, 20 to 30 minutes for our market analysis, I give you the analysis and you know your execution methods on the lower time frames, and you can take advantage of that. Early this morning I initiated a trade with the USD JPY, guys, because I find it useful for me. At least it's worth the risk based on my trading strategies. So I'm looking to go short in this one here because the price is almost at this resistance. It's also at the upper band with this doji candle, and I pretty much like this kind of setup. The range, it's about 65 pips. The stop loss, the ATR, it's about 130 to 150 pips for this currency pair. So the risk reward is there. The market, it might gonna move to the downside. Again, trading is all about probabilities, and it's nothing wrong if we get losing trades. It's part of our daily business here. USD Canadian dollar, I will be looking to go long on this one later in the New York session, not now. I'll be looking for some more bounce to the upside because the price came at an area of congestion. It's like bearish candle, bullish, bearish, bullish. So there is a lot of trading activity here, and I would be interested to go long. USD Swissy or USD Swiss franc. Price made higher highs. And Swiss franc was fairly weak as a currency last week, guys. So maybe we will see some more weakness on this one. Tomorrow there will be fundamental news that they estimated for a weak Swissy. So let's see what's going to happen. Any questions, guys? Any questions you may have? Any comments? Maybe you see something that I didn't see in the market. Please let me know. I would like, if you want, so you don't feel bored just watching this live webinar, just make sure you engage a little bit. You can ask questions, you can add some comments, you can let me know your thoughts. Maybe you're looking for something different. Yeah, you want to see a currency pair like Joe. CAD Swissy, absolutely. Let's check the CAD Swissy. CAD CHF. So on the daily chart, the price reached, I was looking at this one actually this morning because if you go on the monthly chart and you find the high, here there is a resistance, monthly resistance actually. That's a monthly resistance. Then on the weekly time frame, price it's right at this resistance, of course. On the daily, there is an area of we can say that the price is testing this resistance. Now it false break out this upper band, so we might gonna see some move to the downside. Technically speaking, it's a good one to have it in our watch list, in my opinion. Going down to the lower time frame, hourly chart. So the hourly didn't turn. It still makes higher highs and higher lows. That was the recent swing, and it hasn't been penetrated yet. Yes, it's been tested, but the price didn't penetrate it. So a bit aggressively, we can go short. We can sell below the low here, or we wait for the price to break below this support, and then to look for the bounce before we short it. So that's the plan on this one. Australian dollar, New Zealand on Friday. Let's get rid of the Bollinger. So on Friday, so here, the market broke below this area of support, this upward trend line, and is hitting lower. It created this lower low here. So we are missing the lower high now. That's the high. We want to see some kind of retracement, any kind of swing high or market top, and then we look to short. We are good to short. Again, the price is selling off. Am I going to continue to move lower? So if you have plans to go, let's say, on the lower time frame and to get some kind of advantage if the price it's going to move a bit lower from here. So that's something to keep on our watch list as well. And the pound Japanese yen, it's also, in my opinion, a good one because the price on the daily chart, let's start from the daily, is at this resistance here, rejected the resistance, yeah, as you can see. And if it's going to break below this area, maybe it can give us a good entry. The congestion started pretty much this, I would say it's this area here, because I like to find the common area of all these candles to define, let's say, the most tradable price levels, and it's this one down there. So if this is going to work well, maybe we're going to see the price come here, and that's maybe the room of opportunity. I will keep an eye on that anyway. On the lower time frame, how do you understand what we just said? It's the break of this low here with a stop loss above the high. That's exactly the daily range, the high and the low. So it will be the same way. Euro yen, it's similar to this one, but it's not at an area of resistance. That's the difference. It's below an area of resistance, actually, if we say that this is the resistance, but it's not exactly at a place we would like to short this one. But again, if everything it's going to get weakened against the Japanese yen, most likely we're going to also see the euro to follow as well. New Zealand, since the Asian session is trading lower, and you see that it retraced a little bit. Let's see what's going to happen with this one. Yeah, I think, guys, we covered pretty much everything. Gold, it's still around this area of within this range. So it hasn't break to the downside yet. It only falls break here at the top, At the bottom, it didn't penetrate. If we see the price moves lower, we're going to look to get short. But if we see the price moves higher and close higher, then we're going to start looking for longs. But now it's just in the middle. It's sideways. Retail traders, I don't know if you have some bias, guys, but from the high probability perspective and statistically, we don't have anything to indicate that this market is it favors one direction over another. So I prefer to be a bit cautious with this one and wait for a clear break before I will look to get involved. Guys, if you are trading something like Mexican pesos or Norwegian Corona or this stuff on the higher time frame, you can let me know. I can help you with analysis there as well. It's not a problem. You just tell me which currency pairs you are looking for, and I'm happy to help you with your analysis. So, thanks. How do I join your Telegram from Joe? Let me share the Telegram link. Guys, for those they are interested to join the Telegram, let me share the link with you. Just 1 second. So it's this one here. And that's copy link. Okay, that's the one. Guys, just in case someone asked a nice question, how to stay disciplined in trades. Guys, by the way, our online education academy, MarketMinds Mastery, offers webinars for prop firms and market analysis also for a prop firm. I can share the link if you want to sign up for any challenges. And I say that because someone asked how to stay disciplined in trades. And on the latest webinar I did, if you want to know, I said that discipline is the outcome of something else. Discipline, many traders, they are looking to, and especially I see that on a daily basis, right? It's not only you, friend, that asks how to stay disciplined. There are many people asking on a daily basis, especially when we do one-on-one coaching, and it's something we try to break down. So discipline is the outcome of trust. If you trust something you do over and over again, which means something you do repeatedly, however you call it. Sorry for that. It's not my native language. So it's gonna help you if you do something over and over again to build trust and keep doing it even if you experience losing trades. So by building trust in your trading plan and your trading methods, automatically it's gonna make you a disciplined trader. What is a disciplined trader? A disciplined trader is the trader that trades without any hesitation, any fear, any kind of emotion that they bring, mental volatility. Okay, now people, they think that this emotion, the greed, the fear, the anxiety, all the emotions, they think that a disciplined trader is a trader who disappears these emotions. Whereas in reality, because we are humans and we run by emotions, The emotions are always there. The emotions are always, always there. They will never, ever go away for as long as we are alive. So, how the way to handle the emotions, we don't go directly to find solutions for the emotions. The only way to handle the our emotional state while trading is by becoming very, very firm when we execute trades. We must have a trading plan to execute that trading plan like a robot. And that, if we do it over and over and over and over again, that's going to create that barrier around us that will allow us to stay, what we say, disciplined while we're trading, because we are trading the plan. And many times I mention it on this webinar or on other private webinars. I say that all the time, but people, for a reason, they don't get it immediately. In trading, in the world of trading, we don't trade the market. That illusion that we go to trade the market is what people, they think before they become consistently, and allow me to say the word with uh, uh, profitable traders, with all the disclaimers being said, and we put it there that I don't give any personal or financial advice. Okay, and of course we experience losses, but we also can make profits in the markets they offer. Now, when you try to trade whatever is going on in the market, like this one here, Euro New Zealand, I think the price comes here. Here it's an order block. Okay, I'm going to try to short it from there. I'm going to put a stop loss wherever above here. If you try to all the time go in the market and see what's going on, and you try to create a way to trade and a plan that time, I'm telling you, you are setting yourself for failure. In market, to find some kind of consistency that it's going to build up your trust, and it's going to build up your discipline, and to take you where you want to be, you need to trade a trading plan. And you're going to look in the markets to find which currency pair, indices, or any instrument anyway fits that trading plan. Okay, if you start, just think for a while what I just explained you. You don't trade the markets, you trade a trading plan, because the markets, they change all the time, and you can't change a trading plan all the time, because if you don't do the same thing over and over again, then you're not going to build trust, and you're not going to find consistency, and you're not going to build discipline. If you go opposively, and that's the last thing for today, if you try to trade the markets and you change all the time the way you read the charts, the way you express trading setup as an execution, you're going to repeat the same process, and that is randomness. And then you're not going to build trust, because you do different things all the time. Then you're not going to build consistency, and you will not build discipline. So everything comes down from the root that is, I do, you do, we do the same thing over and over and over again. That's the way to move forward in trading, guys. Okay, and to experience trading from the perspective we want to experience trading. You are very welcome, Joe, and everyone else. Janice asks, good morning, Theo. Do you know why the New Zealand is so strong now, Theo? Joe asks, any books recommendation? There are many books. It depends what you are looking for. I mean, I like, for example, if you are looking to understand a bit more, maybe you can if you want to learn about technical analysis, for example, you can go to John Murphy's book, Technical Analysis Markets. If you, for example, you are looking more into build some mental barriers in trading, you can look at Mark Douglas. He has a couple of very nice book, Trading in the Zone, or Dr. Alexander Elder, Trading for Living. He explains his 3-method system. It's like he starts from the monthly chart, goes to weekly, goes to daily chart, and then you can apply it, let's say, on any time frame. So there are quite nice books. Regarding why the QE is so strong, there are some fundamental news last week helped the QE. I think it was the unemployment rate. Which one was it? Helped the QE to become more optimistic by traders. So that's what we see. That's what we saw last week, and today it's just the markets are kind of retracing. We don't know if it's going to build some trends now or what's going to happen. Guys, it's questions like this you ask about how to become disciplined or how to learn something beyond what you read on the net, because experience also it's a huge factor in trading. You are very, very welcome to ask. And remember, the purpose of these webinars, it's for you to learn and try to attend as often as possible, or you can rewatch them on YouTube when we upload. So would like to wish everyone to have a nice and a lovely day ahead. Thank you so much for attending the webinar. And I hope we add a lot of value in your trading throughout this free education we offer here at MarketMinds Mastery. And happy trading to everyone, guys. And I look forward to see you again. On Wednesday, tomorrow, we're not going to have a webinar, but on Wednesday, we will have a live market webinar. So thank you so much, guys, and have a great, great day. Bye, everyone.